Middle East and Africa are top. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks rally after the S&P 500 closes above 5,500 for the first time. Fed Chair Jay Powell says inflation is on a downward path.
I think the last reading and the one before it in inflation, the one before it to a lesser extent, do suggest that we are getting back on a disinflationary path.
Sterling gains ahead of the last day of campaigning in the UK. Before voters head to the polls, we discuss party ratings and economic impact. Plus, South Africa's Reserve Bank governor tells us monetary policy will be focused on achieving price stability by the first half of 2025. It is just gone 8 a.m. across the Emirates, 6 a.m. here in South Africa where I am. I'm Jennifer Zabashaja in Johannesburg. Let's take a quick check at where markets are this morning as the trading day kicks off on this Wednesday morning. We're taking a look at equities and futures right now, really just to see where they are right now in the green in particular, but really that's off the back of a record-setting day that we saw on Tuesday for both the NASDAQ and the S&P 500. What we saw the S&P, closed above 5,500 on Tuesday for the first time in its history, extending its 2024 gains yet again, adding more than $16 trillion in market value from a low back in October of 2022. If we take a look at the NASDAQ 100, also hit a new high on Tuesday, closing above the 20,000 mark for the first time, with Tesla leading the gains in mega caps. We also have the 10-year yield up there right now, unchanged as it stands right there, but at 443.16. All eyes, though, are on the payrolls data that we'll get from the U.S. on Friday. And finally, we have Brent crude up on the wall because we have been taking a look at how oil potentially extending its bullish gains for the summer. There are geopolitical issues that are fueling that. There's also the kickoff to the holiday season and the hurricane season starting a bit earlier, perhaps portending higher oil moving forward. But let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, I think in the Asia-Pacific, what we've been focusing on is Jay Powell's comments that suggest we could see those Fed moves towards rate cuts sooner rather than later, especially as he talks about that disinflation path, right? So there is risk appetite this part of the world. Japanese equities are doing pretty well. In the past 30 minutes since they've come back from the lunch break, they have extended the gains from the morning session. And we're actually seeing the Nikkei sitting well above the 40,450 level, highest since March this year at least. The Hang Seng is the outperformer, but we're actually seeing the CSI 300 coming under pressure. Some data today causing concern about the Chinese economy. SoftBank, another share that we are watching today. Tech, of course, has been doing well as that optimism about Fed rate cuts fueling the whole sector. And we're seeing SoftBank shares also trading above that record high level. Let's flip the board and take a bit of a deeper look at where we go from here on Japanese equities, because if you're wondering how long can this be kept up, if you look at the relative strength index of the topics, we're actually seeing it at, I think, around the 70 level thereabouts, and it is moving in the upward direction. So this suggests there is strong momentum for the climb in Japanese equities. Jen.
Thanks so much to Avril Hong in Singapore for us. Now, let's take a look at some other stories that we're following this morning. Starting off first with Iran. Iran's presidential candidates have squared off in their final debate ahead of Friday's runoff election. Reformist Masoud Pekashan and hardliner Saeed Jalil discussed the impact of Western-imposed sanctions and presented their proposals for reviving a nuclear deal with world powers. Pezeshkian says his administration would immediately work towards lifting sanctions lifted and vowed to, quote, repair the economy, while Jalil pledged to support Iran's stock exchange market by providing insurance to stocks as well as financial support to local industries. European officials tell Bloomberg Chinese and Russian companies are developing lethal attack drones. They say the firms held talks in 2023 about collaborating to replicate Iran's Shahed drone. A version was reportedly developed and tested this year in preparation for shipment to Russia. In a statement, China says it does not provide weapons to parties of the Ukraine conflict. And finally, Finnish President Alexander Stubb says China should do the right thing and help broker peace for the war in Ukraine. He told Bloomberg exclusively that Russia is dependent on China now, and President Xi Jinping could solve this crisis.
Was sitting on the fence. It was sort of looking around, trying to understand what was happening and why Putin was doing it and what the ramifications are for itself. But as time has progressed, and we're now almost 2.5 years into the war, China has started to provide Russia with different types of aid, not direct military aid, but issues linked to energy, sometimes even dual use of goods. I argue that Russia is so dependent on China right now that one phone call from President Xi Jinping would solve this crisis. If he were to say, time to start negotiating peace, Russia would be forced to do that. They would have no other choice.
How likely do you think that that phone call would be made?
I don't know, but I call upon China to do that. If China is genuinely interested in peace, if China is genuinely interested in harmonious relations between nation states, it cannot allow a country like Russia to drive an imperial, at the end of the day, aggressive and colonial war against a independent nation state. It needs to protect the international rules which are linked to territorial integrity and sovereignty. That is the right thing to do, and that would also show leadership from China. And I think it would get a lot of goodwill, not only from the global south, but also from most countries in the global west, were it to be taking a stronger role in ending this war.
Meanwhile, Chinese President Xi Jinping and Russian President Vladimir Putin have arrived in Kazakhstan to attend the 2-day Shanghai Cooperation Organization summit. Meanwhile, worried by deepening China and Russia relations, India Prime Minister Narendra Modi is heading to Moscow next week for talks with Putin. The visit marks Modi's first visit to the country since the Ukraine war. The meeting is set to help Putin counter Western efforts to cast him as a pariah. All right, plenty more still ahead. Israel orders the evacuation of Khan Yunis, raising risks of an imminent new ground offensive. More on the latest in the Israel-Hamas conflict next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Fed Chair Jay Powell says the latest economic data suggests inflation is getting back on a downward path. But he added officials would still like to see more evidence before lowering interest rates.
That inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy. Frankly, because the U.S. economy is strong and the labor market is strong, we have the ability to take our time and get this right, and that's what we're planning to do.
Let's bring in Oliver Kettlewell, Fixed Income Executive Director at FAB Asset Management, sitting in our Dubai studio. Oliver, good morning to you. Thanks so much for joining. So there, we're hearing from a lot of central bankers from Sintra this week. Fed Chair Jay Powell, perhaps the most interesting. How are you interpreting those latest comments that we heard from him?
Yeah, Powell was typically balanced. I mean, as central bankers are when they're kind of doing these interviews. But I think the key takeaway for us was that he definitely left the door open for potential cuts. He said a few more months of good data could lead to monetary policy easing. So that, for me, means if the data during summer is good, September is in play for a cut. And the Fab House view is a first cut in September, a second cut in December. That could change if we have a policy shock from a potential new incoming president. But for now, I think the base case of 2 cuts remains in play.
Well, and Oliver, what does that mean then for equities? Because we did see equities, as we mentioned, on Tuesday reaching a new high. Do we potentially continue to see new records being reached?
Equities can grind higher from here for sure, because the economy is holding up really well, and we're expecting another 200K NFP number this Friday, and that's signals a robust economy. So I think that equities can certainly grind higher. I think that would be the key phrase I would use, but I don't think you're going to see the gangbuster returns that we've had in the first half of the year for equities in the second half of the year.
And the big question here, Oliver, as you were mentioning, is, of course, that November election and potentially what that means then for U.S. government bonds. I mean, from the FAB perspective, if we potentially do see Trump back in office, what does that mean then for fixed income and your allocation there?
Yeah, I think Trump's policies are bad for bonds, because Trump's policies are inflationary, and bonds don't like inflation, as we've seen in the last couple of years. If you take Trump at his word, tariffs are inflationary, tax cuts are inflationary, defense spending is inflationary, anti-immigration policy is inflationary. So, all of these inflationary policies into the mix, and I think that's why you've seen bonds sell off post the first election debate on Thursday, because now investors are recalibrating the likelihood of a potential Republican sweep in November. So I think that's why you've seen a difficult period for bonds, and we would expect that trend to continue if the polls strengthen for Trump in the coming months.
So what does that mean then for allocation, Oliver, for you and the team?
Yeah, so allocation-wise in fixed income, we've gone underweight duration, actually just before the first presidential debate, because bonds had a good 2-month rally, so we took that opportunity to take some chips off duration-wise. So we've shifted from overweight duration to underweight duration. And I think that makes sense. If you take my last comments, I feel as though the yields can potentially grind higher from here. So I think we'd rather be underweight duration. Equities might fare better, because if again, it's a big if Trump or Republicans win in November, they're more likely to have turn on those fiscal spending taps, and that could potentially be good for equities. So we're neutral equities right now.
Yeah, it's a big question mark there, Oliver. I have to ask you about South Africa, because whenever you're on, we get to talk to you about it. And of course, we finally have a new government being sworn in today. I wonder, given all of the uncertainty leading up to the election and then what the government and the cabinet was going to look like, I mean, has it changed your perspective potentially on where you're focusing on this in this South African market?
It's not changed our perspective per se, but certainly the formation of the new government has supported our case to stay invested in South Africa, if you like. I mean, markets, obviously, investors, we don't like uncertainty. And there was a period of a few weeks of uncertainty post your election where the government was being formed. But now you do have this national unity government. I think that's a sigh of relief. And particularly because the cabinet is arguably more market-friendly now than it was before the election, especially with the inclusion of the DA, because they're the most pro-business party. So we like the look of the cabinet. We like the look of some of the ministers that have been appointed. I think the key one I'd mention is the reappointment of the finance minister. I think he's got a good track record in the market. He's particularly with fiscal prudence. So I think that's really important for bond investors, right? So we're pretty happy with our South Africa exposure right now, and hopefully the unity government can hold for a while.
Right, and that's the question, Oliver. There's still a bit of uncertainty as to whether or not that actually is going to hold. I wonder, when we just think about globally, I mean, what else are you paying close attention to? Perhaps that the U.S. and South Africa and all of these other elections that are happening are potentially letting some things fly under the radar.
Yeah, I think the other thing we're looking at is still, look, the short end of the curve still looks really attractive because of this higher for longer environment. I think one of the consequences of higher for longer is that clients are really interested in short duration products because you can get 5.5%, 6% money market rates right now. So I think that's something that still looks appealing, and I think that's something that's still going to be in play because central banks around the world, even if they cut, they're going to struggle to cut meaningfully in the coming weeks and months.
Yeah, and we'll wait to hear more from that ECB conference in Sintra to see if we get a little bit more reading into it. Oliver Kettlewell, Fixed Income Executive Director at FAB Asset Management. Oliver, thanks so much for stopping by our studio. All right, still ahead, we get more on the latest in Israel-Hamas and the conflict there. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. South Africa's Reserve Bank governor has welcomed the reappointment of Finance Minister Enoch Godongwana in the new coalition cabinet unveiled just this week. Lesetja Kganyago also discussed inflation and interest rates during his conversation with Bloomberg's Francine Lacroix on the sidelines of the ECB's annual retreat in Sintra. Take a listen.
I'm not sure why people are so focused on the Fed cutting interest rates. People should be focused on the Fed's objective, which is price stability. And so for us as a small open economy, the decisions taken by the Fed affect global financial conditions and to that extent has an impact on the direction of capital flows. But as far as we are concerned, we know that the stance of the Fed changes relative prices in the financial markets could lead to a realignment of exchange rates. And to the extent that our own exchange rate adjusts, we then look at what it means for economic activity in South Africa and what it means for future price formation, and that is what determines the kind of stance that we take.
And so what does it mean for your monetary policy? How do you see it from now until the end of the year?
Well, monetary policy is still very much focused on price stability. We actually expect that we will be back within target in the first half of 2025. There are still risks attendant to that outlook, key of which is geopolitics and what it means for exchange rates, what it means for the prices of financial assets, and thus the direction of capital flows, what it means for global energy prices. And that would then affect the interaction of the South African economy with the global economy, and so we have got that outlook that we will get back into target in the new year, and it is that returning to target that determines what happens with monetary policy.
That was South Africa's Reserve Bank Governor Lesetja Kganyago speaking there with Bloomberg's Francine Lacroix. Meanwhile, the United Nations says Israel's evacuation order of Gaza's city of Khan Yunis affects roughly 250,000 people, with Israel's military estimating 1.9 million Palestinians are now clustered into the Strip's central region. Earlier this week, Israel's military ordered Palestinians to evacuate a wide swath of Khan Yunis and go to an Israeli-declared safe zone, raising fears of a new ground assault into the city is likely imminent. Meanwhile, risks of an all-out war on Israel's northern front continue to grow. The deputy leader of Lebanon's Hezbollah says attacks on the border will not stop until a full ceasefire in Gaza is reached. For more on this, let's bring in Dana Qureshi. She is Bloomberg's Dubai bureau chief, joining us now from the set there in Dubai. Dana, so what does this new evacuation order actually tell us about the military strategy and really what we could potentially see moving forward in the next few days?
Morning, Jen. So this has been one of the main issues for Israel's military on the ground, right? We're seeing it going into a certain area, clearing it out and saying they've destroyed the battalion there. But then a few weeks later, or even months, we're seeing Hamas regrouping and firing rockets. And the significant thing is that yesterday, for that evacuation order, was that Islamic Jihad claimed the attack of 20 rockets from Khan Yunis, and that prompted Israel to go back into Khan Yunis, of course, and order this evacuation. Now, this is very worrying on both sides, because because first you're seeing Israel going back to this area where they had cleared before, putting in more effort, and then you're seeing the refugees or the displaced in Gaza moving again around, and that's of course compounding the humanitarian situation that we're already seeing on the ground there.
Does it make a difference, Dana, that we have now heard from Hezbollah's, the second in command with Hezbollah, especially when it pertains to what is happening there at the border in the region?
So in that interview, the deputy chief said that there won't be a ceasefire on the Lebanese border with Israel unless there's a ceasefire in Gaza. That's been the line that they've repeated publicly and privately to mediators who've been trying to come to a compromise between the two to, of course, reduce tensions and start maybe talks on border disputes between Lebanon and Israel. But what was interesting there in that interview that he gave and that was published yesterday is that he said even if Israel goes into this phase of reducing the intensity of the fight in Gaza, and that's what we've been expecting the Israeli army to announce, right, that they have gone into the third phase of the Gaza war where they are reducing the intensity of the fight there. And he said we would have to see whether that would reflect on the Lebanese border as well. We'll have to see what the impact of it and what it is really on the ground. So he didn't really give an answer of whether a low-intensity fight in Gaza would have a positive impact on the Lebanese border.
Bloomberg's Dubai Bureau Chief Donna Quraish there in Dubai for us. Donna, thanks so much for your reporting there. All right, now for a look at some other stories we are following this morning. Brevin Howard Asset Management is slashing fees for its biggest fund to make up for technology, infrastructure, and talent expenses that push pass-through costs too high. The firm is reportedly scrapping the 1% management fee for its Alpha Strategies fund until the new year. Many multi-strategy funds have been facing fierce competition for talent, forcing them to pay up to attract new hires, which contributed to rising fees. And HSBC is slowing down hiring and asking investment bankers to rein in their travel costs as it looks to curb costs. In many cases, Europe's largest lender is not replacing staff who have left or resigned, and in some businesses have been told to pause hiring altogether. Investment bankers have also been encouraged to set up at least 3 client meetings a day in order to make the most of work travel. HSBC's belt tightening is the latest sign lenders are starting to prepare for what could be the beginning of interest rate cuts around the world. And finally, independent film and TV producer Skydance Media is said to have reached a preliminary agreement to buy Sherry Redstone's National Amusements and merge with Paramount Global. Sources say an agreement could be announced within the coming days, though the deal could still fall apart. The Wall Street Journal says Skydance is offering to pay $1.75 billion. All right, coming up, it is the last day of campaigning before the UK general election tomorrow. We are live in London next to dig through the big topics. This is Bloomberg. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks rally after the S&P 500 closes above 5,500 for the first time. Fed Chair Jay Powell says inflation is on a downward path. Sterling gains ahead of the last day of campaigning in the UK before voters head to the polls. We're going to discuss party ratings and economic impacts just ahead. Plus, South Africa's Reserve Bank governor tells us monetary policy will be focused on achieving price stability by the first half of 2025. It is just past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa in Johannesburg, where I am. I'm Jennifer Zabasaja. Thanks so much for being with us. Let's take a quick check at where markets are as we're starting the day here. The S&P and NASDAQ 100, as we mentioned, hitting records on Tuesday and still largely seeing green if we take a look at where they're at right now. The S&P 500 on Tuesday closed above that 5,500 mark for the first time in its history, as we mentioned there, extending its 2024 gains. Yet again, a lot of that is off the back of what we heard from Fed Chair Jerome Powell in Sintra on Tuesday. When we take a look at the NASDAQ 100, we also saw records performance for that indice, setting a new high, closing above the 20,000 mark for the first time. Right now, it's looking like potentially we will see that extend today, although it is a truncated day because of the July 4th holiday tomorrow. But we did see both of these indices do quite well on Tuesday. If we look at the 10-year yield, not much is happening right now, a bit unchanged. But oil is an interesting story, up about 0.5%, just over $86 there. And a lot of that is steadying near a 2-month high off the back of what we're hearing about the hurricane season. There is the holiday season, of course, that is increasing prices there and potentially even geopolitical risk. But let's check in on how markets in Asia are faring. Avril Hong, of course, is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. We're seeing Asia stocks running higher in line with Wall Street's climb. It's those Fed rate cut optimism, and we're actually seeing tech, now the sector that is outperforming as the session progresses. But the other bunch of stocks that we've been watching very closely today are the EV-related ones after Tesla's sales declined, but not as bad as expected. That's helping to lift its suppliers in this part of the world, including LG Energy. It is the biggest boost on the Kospi today. The other EV stock that we've been watching is Tesla's nemesis in a way, BYD, because it has managed to clock record sales, and its EV sales are now within striking distance of eclipsing Tesla's yet again. And let's flip the board and take a look at BYD and where it goes from here. Its recent performance was helped along by price cuts. It's also because of the tech rollout, some of its product offerings, such as the hybrid vehicles, the 5th generation of them. So all things are spurring its sales, and you'll see here that versus some of its other peers, the divergence is widening, something that's set to continue, especially if you consider in the context of those EU tariffs. For BYD, it was lower than average versus its peers. Jen?
Avril Hong in Singapore for us. Avril, thanks as always for the updates there. All right, we mentioned this at the top of the show. It's the final day of campaigning before the UK general election tomorrow. Former Prime Minister Boris Johnson has made a surprise appearance urging Conservative voters to deny Labour a landslide victory. By 10 p.m. UK time tomorrow, we'll get the official exit poll. Our UK correspondent, Lizzie Burden, is joining us now to walk us through the likely outcomes, sitting by in London. Lizzie, what is it that we're likely to see? What are you paying close attention to?
Well, Jen, the polls have consistently indicated that we can expect a Labour victory tomorrow, but the bookmakers have been looking at what size majority we can expect. So let me run through the scenarios in order of likelihood according to the bookmakers. The first scenario is a 250-plus seat majority for Labour. Now, this, Jen, was barely conceivable after the 2019 general election when Jeremy Corbyn and his Labour Party were pretty much annihilated. But it speaks to the turnaround in the Labour Party under Keir Starmer, the new leader. And this would be termed a supermajority. It's a new word in the British parliamentary lexicon. It's an import as well, but it's being used by Conservatives to warn of untrammelled power for the Labour Party. Starmer, for his part, says that that smacks of Conservative desperation, but it would mean that Labour could get its policy programme passed without having to worry about rebellions from within. And it would also likely put pressure on Keir Starmer actually to be bolder in terms of going for growth. Our economists at Bloomberg Economics say it would be a boon for the UK economy because, remember, there have been lots of economists who've said actually that as it stands, his plan for growth is a bit of a gamble. Now, let me take you to our second scenario here, a 150-plus seat majority for Labour. It would still be a huge win for Keir Starmer. To put it in context, Tony Blair in 1997 had a 179-seat majority. This would be almost twice Boris Johnson's 2019-seat majority of 80 seats. And it would still let Starmer pass his legislation, but it would save the Conservative Party from extinction. Now, if we look at the third scenario, a narrower Labour win, a 50-seat majority, once upon a time, this would have been a big win for Keir Starmer before you had Partygate under Boris Johnson, Liz Truss's 49-day administration. But now, with expectations so high, this scenario would be a big shock. I can tell you now, the headlines on Friday would be, what on earth went wrong for Keir Starmer? How on earth did the Conservatives manage to stave off defeat? And then, if we look at scenario 4, this really would be a shock, a hung parliament. It would mean that Labour's the biggest party, but it wouldn't have a majority. Starmer would then have a choice of forming a government in minority or making a coalition with the Liberal Democrats led by Ed Davey. And that begs the question, what would Davey try to extract in exchange from Starmer? Would it be closer ties with the EU? Would it be proportional representation? Maybe Starmer couldn't stomach that and he goes to the polls again in a matter of months. Just finally, the last scenario. This is the wild card. I've thrown it in for you, Jen. It would be the Liberal Democrats as the opposition. Ever since the First World War, you've had the Conservatives or Labour as the official opposition, but you could see a real shake-up of the two-party system here. It's unlikely, but not impossible.
Bloomberg's Lizzie Burden walking us through all the various scenarios there. Lizzie, thanks so much for that reporting. Let's stick on this topic, though, and get more insights on the UK election with Cristina Juverdeanu. She is the International Politics Lecturer at Queen Mary University of London, joining us now. So, Cristina, thanks so much again for waking up early. Lizzie just walked us through a few different scenarios there in a very great and detailed way. I wonder, what do you think is the most likely scenario just 24 hours out from when these polls will start closing?
Good morning, and thank you for the invitation. Indeed, there are several scenarios on the table, and polls vary, but not to such a great extent. And it is indeed expected that Labour will have a 20-point lead over the Conservative Party. So it is expected that as of tomorrow, Labour will be the new party in government. That being said, I think not all is set, and there are some points that we have to pay close attention to. First of all, and you have it on the screen now, it is really Reform UK, Nigel Farage's far-right party. That is one of the newcomers in this election, and that has made significant gains in the recent days and months. And one of the questions is, what will happen? How many seats will Reform UK win outright? What are the chances? The expectation is that not that many, given that their support is rather evenly distributed, and we have to keep into account first past the post. So there will be maybe a few seats, for instance, Nigel Farage's seat. But beyond that, the question is, what will it mean for the Conservative Party? And it is indeed expected that it will tip the balance for the Labour Party because of the strong support for Reform UK. Another thing to pay attention to is what will happen to the S&P. And we expect that up to 30% of S&P seats will move to Labour. This will come under one of the more important scenarios of a very strong Labour majority. Labour has played it down, didn't want to say that they will have this a supermajority because they want to make sure that voters still go to the polls tomorrow. So many things to pay attention to. The 20-point lead is pretty sure, but I think the questions we should really pay attention to is, will Labour regain its red wall? Will S&P see so many seats lost? And what will happen to Reform UK? How many outright seats? Will Nigel Farage finally get his seat in the Commons? Most probably yes. Right. And what will this mean for the party system, as you were pointing?
Well, and Cristina, what could this potentially mean if we are to see the outcome, one of these outcomes that we were just outlining there? What could this potentially mean then for the first agenda item on this next government? I mean, what do you think then will be prioritized?
Yeah, so if polls are correct, and that's usually the track record, we will see Keir Starmer as the Prime Minister of the United Kingdom very soon. At the top of their agenda is actually economic growth. And economic growth in terms of jobs, but also productivity, has been one of the main priorities. Will this be easy to achieve? I'm not so sure. We should take into account the fact that the UK is fresh out of last period of the last year in recession, so the economic situation is rather frail. We talk about the crisis of living and people being upset with their standard of living these days. So economic growth is, of course, one of the most attractive priorities and the main for the Labour government, but nevertheless, it won't be easy to achieve. Also, on top of their agenda, there are all sorts of reforms. So reforms in terms of childcare, in terms of the NHS. Will they be easy to achieve? I'm not so sure about that either, given this economic situation and the fact that people do not want to see more expenditure. But I think it is important to think about international priorities as well. And of course, domestic priorities are crucial, but we are in a very unstable international context. We have wars going on, and we have potential economic situations changing, potential political stability changing. So it is expected that Britain will seek to strengthen its national security. It will seek to have a role on the international arena. And I think this should be put in context, given that we might have President Donald Trump in the US, and we have seen a rise of the far right in the EU and in European countries themselves. So it is expected that the UK will seek to find allies and a ground where it can really show its strength.
Yeah, and of course, a lot happening politically with the EU, so a lot to pay attention to there. Cristina Juverdeanu, International Politics Lecturer at Queen Mary University of London. Thanks so much, Cristina, for those insights there. Nice to have you on this morning. Now, a quick look at some of the other stories that we are following this morning. We were just talking about the EU. Marine Le Pen's national rally in France is trying to outmaneuver rivals in the final round of legislative elections on Sunday. President Emmanuel Macron, his centrist group, and a left-wing alliance is racing to coalesce and pull out candidates in a political game of chess to avoid splitting their votes against the far right. In response, National Rally is redoubling efforts to gain support ahead of the poll. And over in the U.S., President Biden is blaming jet lag after trips to Europe, admitting he did not have the best debate night and should have listened to his staff. He visited France in June and then returned to Italy days later for the Group of Seven Leaders Summit. Biden now plans to meet with Democratic leaders in a bid to reassure supporters over his fitness and mental ability. The Washington Post reports former President Barack Obama has privately voiced concerns about Biden's re-election path and offered Biden his advice. All right, coming up, Microsoft's AI deal with the UAE's G42 faces risks over national security concerns. We're going to bring you the details next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. Back in May, Microsoft and G42, the United Arab Emirates AI firm, announced plans to spend $1 billion on projects in Kenya, a deal which was negotiated with input from the U.S. and UAE governments. But while some see this partnership as a way to help the U.S. combat Chinese influence in the global south, others are concerned about potential national security threats. For more on this, we're joined from Riyadh by Matthew Martin, Bloomberg senior reporter for Middle Eastern Wealth Funds, and our Africa tech and media reporter, Loni Prinsloo, here in the studio with me. So, Loni, let's just start with you. Let's take us back to why the U.S. would pick Kenya for this sort of pursuit. What is the story here?
Thanks, Jen. Basically, Kenya has been rivaling South Africa and Nigeria as a tech power on the continent. they've put in quite a lot of policy, tech-positive policy, when it comes to education, but also to try and win investment when it comes to, just drawing investment for tech cities, things like that. They have quite a big tech city actually in the works. That's about $14.5 billion, which Huawei is also contributing quite a lot to. Also, it has the demographics. So it has a really fast-growing population. The economy is growing really well. And just young people, increasingly tech-savvy people that turn to their phones for all sorts of services as they try and sort of breach physical sort of infrastructure gaps. So it's all there. It's sort of quite a breeding ground if you want to look at tech investment on the continent.
And let's bring in Matt here for the U.S. perspective. You're sitting in Riyadh, though. Matt, just talk to us about the concerns now that we're hearing from the U.S., in particular when it comes to this deal.
Yeah, so the U.S. saw this as a way of sort of capitalizing on using money out of the Middle East, the UAE specifically, sitting on these vast pools of oil wealth, of using that as a way of partnering with U.S. technology firms to give them the lead in this AI race against China and build support in countries across Africa and other regions where China has really been investing and developing. But it was also used as a way of trying to also push the UAE out of its own relationship with China and try and cement a US-UAE partnership on AI. But there's still some concerns within the administration in the US about how committed the UAE really is to securing these H100 in particular, these really high-tech NVIDIA chips, making sure that they are completely insulated from any Chinese involvement in being able to get access to these chips, get access to these data centers that will be built. And also Microsoft as well has had its own cybersecurity issues. And so the administration has both got these two concerns over both of these partners in there. First of all, how good is Microsoft going to be at making sure that it has all of the checks and balances and security in place to make sure that no Chinese companies can get access to what it's building elsewhere. And it also has these concerns around the UAE and G42, which has in the past had relationships with Chinese tech companies and has said it's going to get out with them. But how committed is it really going to be to that? So it has these two big concerns over this partnership and how it's going to develop over the years to come.
So then what does that mean then, Matthew, for the administration's next move? And I'm talking about the U.S. here in particular.
Well, at the moment, what has happened is that these the key part of all of this is these NVIDIA H100 GPU chips, which are sort of a cornerstone of this AI race. They're the most advanced chips that, they're the most advanced chips that are around, or they're the really sensitive ones that they want to make sure the U.S. doesn't have access to. At the moment, the export of these chips has been very, very tightly controlled. One of the things that G42 was hoping through this partnership with Microsoft was that this would allow them to get access to it for their own ambitions within AI and their own developments within AI. And so they are still lobbying and working on the U.S. government to allow more of those chips to go to G42, to go out into places like these projects in Kenya. And so this is really the logjam. We've seen Sheikh Tahnoon, is the UAE National Security Advisor, chairman of G42. He's gone out to the U.S. to try and lobby and find a way of getting access to these chips. So whether the UAE gets this, whether they can convince the U.S. administration to export these to them, is going to really be the key development to watch as to how this partnership develops and whether it can become something really, really significant, or whether it's going to continue to be hampered by these big geopolitical concerns.
It's a fascinating story that everyone should take a read. We have to leave it there, though. Bloomberg's Matthew Martin in Riyadh and Lonnie Prinsloo here in Johannesburg with me. Thank you both for your reporting and for joining us. All right, coming up, Turkey is set to release its latest CPI data. We're going to discuss the economic impact of one of the world's highest levels of inflation next. This is Bloomberg. Turkey's inflation data for June is expected later today. CPI is widely expected to ease for the first time in 8 months, with economists surveyed by Bloomberg seeing the rate slipping to 72.6% in June. For more on this, let's bring in Selva Bahar Baziki from Bloomberg Economics joining us from Ankara. So, Selva, is the inflation crisis soon to be over for the country?
Morning, Jennifer. I think the inflation crisis will be over with the first step being taken today, but inflation is going to remain very high and remain a problem in the years to come. We expect June's inflation out today in a couple of hours to print at 72.4. That's down from 75.5 from May. And in the coming 2 months, we expect price gains to tumble down by 10 percentage points each in the 2 months ahead. But beyond that, the deceleration is going to be extremely slow and very long drawn. We see year-end prints at above 40% for this year and above 20% for next. Now, those are very high, elevated price gains still, and multiples of the central bank's 5% target. So that would suggest that there would be a need for further tightening coming from the central bank. We think that that's going to arrive in the form of tighter alternative tools. That's higher reserve requirements, lower credit growth caps, and restrictions to the banking regulation and rules coming from the central bank rather than a rate hike. So we've definitely seen the central bank peak at 50% in terms of borrowing costs, and now with inflation peak behind, that's the outlook for the coming few months.
Selva Bahar Baziki from Bloomberg Economics giving us a preview there of the inflation. Thanks so much, Selva. All right, that is Horizons Middle East and Africa for today. I'm Jennifer Zabasajja in Johannesburg. Stick with us for Daybreak Europe.